All right, welcome everyone to today's live stream. It is Monday, March 31st, 2025. Hope you're doing great. And let me share my screen here. All right, let's look at the markets. We've got the S&P up slightly, NASDAQ down 120, was down 500 points earlier. So lots of volatility and fluctuations in the market today. That continues. The Dow up 200 and some odd points. So big move on the Dow, up 267. So definitely a flight to quality with the move on the Dow and the move on gold. Check that out. Gold, $3,153.20 an ounce. That's US dollars, up 1.25% today. Oil up as well. So we have a market that continues to be highly volatile and big swings in the NASDAQ. And I mean, at one point, the NASDAQ was down this morning 500 points. Since then, it has recovered a bit, only down 97 at the moment. So, we're going to continue to see these swings, especially when there's this much geopolitical uncertainty. Dare I say, I think we might be the closest to a world war, world conflict than we have been in a very, very long time. It's just everything seems to be escalating. It seems to be tensions are building. So to save time, I chat GPT this and asked summarize world political events leading to world war currently. And so as of today, several geopolitical developments have heightened global tensions, raising concern about the potential for large-scale international conflict. We've got the Russia-Ukraine conflict escalation, the ongoing war there. With continued Russian airstrikes, particularly in these areas. And here's the one that could be the most concerning for us in North America, and that is formation of the axis of upheaval. Did you all see this? A coalition comprising Russia, Iran, China, and North Korea, referred to as the axis of upheaval, has emerged. Where did we go there? Let me get back to where we were talking about. Here we go. The axis of upheaval has emerged, characterized by coordinated economic, military, and diplomatic efforts aimed at challenging Western influence and reshaping the global order. That's the U.S., right? That's, exactly what they're talking about there. The alliance has raised alarms about potential bloc confronting Western alliances. So this is concerning. Iran, it just goes on and on. Global trade wars, economic strain, increased military spending. That seems to be a very pervasive narrative right now. Is the EU all over the world, this increased in military spending. It just goes on and on and on. The vice president of the U.S. announced that there's going to be $1 trillion spent, and there's basically legislation that was introduced recently that would retool U.S. manufacturing to build bombs just like in previous world wars. So that would go through. Should the conflict kick off, manufacturing is going to stop globally. There's no question about that. That's going to severely disrupt our economies globally. And a lot of money is going to be spent on military. So, then the next obvious answer is, is asking how has war historically affected stock prices? Well, initially at the start, stock markets often experience a sharp drop due to uncertainty and fear. I think some of that is actually being baked into the market now with this high level of volatility. If there is an announcement or a declaration, an official declaration of war, then I think, yes, the markets will decline, but not nearly what they have in the past, where there have been sharp drops because of out of, quote unquote, out of the blue events where the market wasn't factoring in that ahead of time. For example, 9/11, the S&P dropped 14% in a week. So they closed the markets, and then it dropped. I remember it vividly. I was a very active investor at the time, and they just shut the markets down. You couldn't even trade. Same with World War I in 1914. I don't remember that one. Major exchanges shut down for months to prevent panic selling. Pearl Harbor attack, I don't remember. 1941, the Dow fell nearly 3% the next day. And so defense, so there's definitely going to be an impact in the markets. But again, with these sell-offs happening on a week-to-week basis, it almost feels like we are just on this borderline of a bear market, because the market cannot get any traction. It just doesn't seem to be wanting to go much higher. It's certainly not retesting previous high levels. If anything, it's making recent lower levels, which makes this a very tricky market to navigate. So, then the logical question would be, defense and military stocks surge, right? Weapons, energy, defense companies often see increased demand and rising stock prices. The Gulf War in 91 and Iraq War in 2003 boosted companies like Lockheed Martin and Raytheon. So there's going to be continued volatility. And then the next logical question from there is, well, what are some timely weapons, energy, and defense companies to buy currently? Here's a few. Transdigm Group, TDG, specializes in aerospace components, commercial military markets. General Dynamics, Northrop Grumman Corp, Lockheed Martin, Boeing. Lockheed has always been the big mover in this instance. Energy companies, Chevron, you see the like here. So clearly there are some opportunities in this market. Lockheed Martin, if you notice, look at the chart. I mean, it's been as high last October at 611, has dropped tremendously, sitting at 443 today, below all of the averages. But look at that MFI at 3286. Let me see if you can see get there. The MFI 3286, sitting at pretty much an oversold position. Should there be a global conflict kickoff, you will see this stock go up, no question about it. Couple things I like about it: insiders are buying the stock as opposed to selling. The price of the stock is below its intrinsic value. Intrinsic value is $559.41, and this almost seems closer to a value stock than it does a growth company. And I mean, those are the major things. You really want to see that the value of these companies' stock prices trading below its intrinsic value in this kind of market. So, if we were to look at, let's go to our pick stock feature. And so if you're looking at this going, all right, so what are some good companies that I can buy into that will actually go up should everything go south? And meaning if a war actually does kick off. And we're going to be looking at, let's see. Let's look at consumer defensive. Let's look at energy and industrials. So those would be the three. If, I'm on this pick stock feature, right? Our major part of the software where we always say the rubber meets the road, where you're finding amazing companies. So let's go for industry best. Consumer defensive, energy, and industrials will outperform a declining market should there be global conflict. Let's look at 4 stars. And now we're going to go over to industry. And we really want to we want to look at aerospace and defense would be the first one to look at. And we're going to scroll down. So sectors are kind of the umbrella, right? They're the big overarching areas in the marketplace, and then industry are when we drill down into the sectors. This is why you'll find a lot more industries than you will sectors. So let's look at. Don't think we want to be looking at beverages right now. Oil and gas is interesting at this point as well. It's just difficult to say at this point, which industry do you look at? Do you look at the drilling? Do you look at equipment and services? Let's go with specialty industry, machinery, aerospace and defense, metal fabrication. Yeah, let's start there and see what we can come up with. Now we're gonna want to let's drill this back to 3 stars and see what pops up. So we've got 2 companies that pop up, but we really want to bring in, maybe if we scale back. Okay, so that really did it. When I clicked off the industry best only, it broadened our search to 233 stocks. So then let's go back and tighten it up. So I'm just clicking from 3 to 4 stars. 4 stars is companies that you'll find that are either ready to break out, like get to the next level. And so here you have them. If you've noticed in our search, we've added revenue growth year over year. So that way you're not wasting your time bringing up companies and you don't know their growth rate. We're really looking at the companies that are growing at a decent rate. And why do we do that? Because growth stocks tend to go up as their growth rate, revenue growth rate increases as well. There's a clear correlation between the two. So that's why we've added this, and you can actually add your own filter to it. Let's say if you say greater than, let's say 10% in this type of market, wouldn't be so bad. So that's going to bring our search down to 24 companies. And then we've also added implied volatility. I've talked about this a little bit, but implied volatility means that the company has option contracts associated with it, and it gives you an idea of if those option contracts are rich enough to look for them. So I'm just noticing right out of the bat, off the bat here, Park Aerospace Corp, low risk stock. 0.3 billion market cap, 4 stars. So that would be considered a base in our base, right? Revenue growth 23.8% and an implied volatility of 53.91. Not bad at all. That looks very interesting. So I'm going to toggle that watch list toggle button there, and that will now start coming across my ticker in the top of the page. Park Aerospace Corp. Very, very interesting. And so you can do this too as you go through. I think another thing I want to do actually is, because we have and welcome to all of our new subscribers. Super happy you're here. And now, because we're a global stock picker, we have, we're showing you companies on the Hong Kong exchange, the London Stock Exchange, in all different parts of the world. So now we're going to specify US, right? Because, just I would recommend that for you as you do your search. Then it brings up 7 companies. So you're not looking at all these stocks that you can't buy anyway because they're not even trading on any exchange that you have access to. So all I did was I clicked regions, and you would just click regions and then scroll down to whatever region you are in the world. And you can see we have representation for a lot of India, lots of different companies there as well, represented through our software. So anyway, check that out and go through and just see, which ones interest you. Generac might be an interesting one at this point too. Revenue growth 16.1. It's got some implied volatility. $7.5 billion market cap. So if it seems interesting, then you click through and just peruse the stock chart and just see, what you're looking at here. Okay, so we're looking at a stock considerably higher, but we really can't put too much weight on especially the last 7 weeks of trading. It's been very challenging. So this stock has sold off from 152 down to where it is today, 126.55. And a lot of these charts are going to look the same. Stock price below the averages, which as an investor is very hard to buy shares of a company that are below the averages, but you might just be buying at a terrific time. I think right now you stick with some cash though, because at some point, should an event kick off, you're gonna see a decline in the markets, and you're gonna have the ability to buy some amazing companies at some really, really good prices we probably haven't seen in a very long time. So keep some cash handy. Continue to buy gold. Gold has had one of the best quarters it's had in decades. If ever, it's been one of those hedges and a flight to quality that, look at it today, 31.51. I've been saying it for a while now that it's been a really good investment to consider. And silver as well. Silver is still affordable, and when you're paying, so we got gold 3,150 an ounce. We've got silver hovering around 34 and change an ounce. Let's see if I can find the quote here. 34.74 an ounce. And I mentioned last week I sold out of my crypto after I read more and more about the confiscation of cryptocurrency by the US government. I thought, who needs that kind of thing? It's tracked so closely that it just is it's not resonating with me anymore. So we sold that, bought some more silver. And I think we can't go wrong with silver and gold. Some of you have asked me, how do you, what are you referring to? Bars, what have you? No, just coins. The physical silver and gold themselves, coins, that you'll be able to keep and pass on to future generations, right? If you haven't used them during this lifetime. So we are going to see a pop in commodities. We're going to continue to see an uptick in those prices. Gold, silver are going to continue to go up. And, in the event of any type of further escalation, we're going to see an increase in continue in those prices as well. So now's the time to be buying this stuff when it's cheaper, less expensive, and certainly an amazing hedge for your portfolio. So I hope this has served you. I hope you have a fantastic week. I guess the major thing here is I've been through I've been in the market since 1990. I've seen so many ups and downs just like this, but different reasons why, but they're never fun to go through them. And I just want to say, we'll get through this. This too shall pass. The time to really be the most excited as an investor is when there's so much fear out there, when there's so much panic, and stocks continue to go on sale, that's when you really want to jump in and take advantage of the good prices. We're not there yet, but we are certainly getting closer to it than we were 7 weeks ago. So have a fantastic week. Talk to you soon. Bye for now.